It's the education and jobs company ADvTECH, and its revenue was up 8% over the 6-month period. Schools operating profit seems to be the one that's really caught the eye, up 16%. Headline earnings per share, though, disappointing to the downside by falling 17%. Dividend of 10 cents per share was on offer. And Frank, thanks very much for coming into the Power Lunch studio. It's a real mixed bag, isn't it? Let's start with the good stuff first of all, and that's schools. You've got some really high profile brand names there, Crawford, Abbott, etc. How did they perform?
Very solidly, and clear evidence of continuing growth in demand for education. People remain convinced of the fact that the best thing they can do for their children is a good education, and we certainly pride ourselves on providing that. That was sustained in the schools division, and what's exciting about that, Lindsay, is we've been able to sustain a significant and increasing rollout of new campuses. We announced 3 in May earlier this year, and another 5 today, which really is evidence of the commitment that we have and the ability we have to continue to provide more and more schools places.
And also evidence of the fact that you think that the private education space at the school level anyway is going to be buoyant and actually needs more capacity in South Africa.
Well, the evidence based on demand would certainly underpin that.
40% of your revenue, is that about the sort of level that you want, or is it are you a little bit too reliant on that particular sector of your business?
No, I wouldn't say that. In fact, it's highly likely that as revenue builds over the coming years with the rollout of the CapEx expansion, that proportion could well increase. One should remember, though, that it's diversified amongst a number of brands, Crawford, Abbott's, Trinity, and the junior colleges. So we haven't really got all our eggs in one basket, although I like the saying very much about putting your eggs in a basket and then watching the basket carefully.
Yes, indeed. What about the type of person that is sending his and her child to your school's division? Have you seen it changed since ADvTECH was first conceptualized and initiated? Are you starting to see definite evidence of a clear middle class emerging in South Africa that want the best for their children?
There is no doubt about that. Across the group as a whole, in my 10 years at ADvTECH, the proportion of black and white students has switched across completely, where today it is 70% black, and that would be a very important and fast-growing sector of our schooling population, and that's really proof of the rise of the middle class representing the whole country instead of an elite few. In our view, a very good thing.
Before we get on to the tertiary side of your business and also the recruitment side, I just want to focus with one more question on schools, if I can, Frank, and that is the skills. When I say skills, I mean teaching skills. Yeah. Are they becoming more and more scarce? Are you poaching people from the public sector? How's it working?
We're in the fortunate position of attracting multiple applicants for every position we make available, and it's a very happy and fortunate position for us. We recognize, though, that simply planning to take teachers from other schools is perhaps not sustainable, and we've built a growing and important pipeline of teacher development. We currently produce a significant proportion in number of the teachers we need to hire each year through our own bursary and student development system.
Tertiary now, the tertiary side of things, you've got 21 sites. This one has disappointed somewhat. I hope you don't mind me saying that. Revenue only up 2%. And from what I can see, it's a very simple situation. Your costs have risen and your enrollments are down, which is not ideal, of course.
As you say. The real underlying story, though, Lindsay, is the fact that we experienced the phenomenon known as operating leverage, where a comparatively small movement in revenue had a disproportionately large outcome at the EBIT level, or the bottom line. And the reason for that is that the tertiary colleges were all set up for their planned intake, and whether you end up with 20 or 30 students in the class, you still have to teach it. Unfortunately for us, the difference between 20 and 30 in this year went the wrong way, and that had the unfortunate outcome on EBIT.
The enrolment story, though, is an interesting one, because I'm just looking at some of your comments, and you sort of say that because of the public sector's assistance to potential scholars with loans and grants, etc., that has hit you. Is it Is it then a case of both external and internal problems in your tertiary division?
Well, we would agree with that, both internal and external. We've made a big investment in technology and new modes of education, as well as curriculum changes, and we haven't met in this period with quite the success we were planning for. As far as external issues are concerned, and one must remind oneself that the downturn in enrollments was 5 to 8%, not a huge number. But those last few students who are crucial for us in terms of academic critical mass and also financially were perhaps given the opportunity to go to other institutions at much lower cost. Not necessarily an institution of choice, but when money is very tight, one doesn't always have the luxury of choice.
Do you think you're going to be able to turn around the tertiary sector in the second half, Frank?
In the second half, I think it's unlikely, to be honest. The main student acquisition timeframe for this year is now done, although there are still a few opportunities in short learning programs and part-time students. So we're really going to have to wait for next year. And in fact, unfortunately, I have to say that in next year, we will have the effect of reduced second-year classes from the lower first years this year. That doesn't mean, though, that we're not doing a great deal of good work to turn the situation around. We've restructured the division somewhat. We've consolidated 3 campuses into our other existing campuses, which will help to drive costs. And we're doing a lot of work, you can imagine, focusing on costs and capital expenditure in this division.
Let's move on now to the resourcing side of your business, the job side of the business. I've been quite encouraged to see some employment green shoots in South Africa over the last couple of quarters. Nothing dramatic. Does that affect your business? I mean, you've seen here a 10% rise in revenue for the resourcing as part of your business and a 21% increase in operating profit. So things also starting to pick up there, which is very encouraging.
Indeed. We wouldn't describe it as an across-the-board pickup yet or a gain in all markets in which we serve, but certainly some of our key niches and sub-niches have seen a good improvement in demand. As a couple of examples you might be interested in, one is the engineering space, and another is the HR or human resources space. It's perhaps good to see corporate South Africa investing in people. So, yes,
yeah, it is, and it's interesting to see you say engineering as well, because I mean there's been a lot of talk about South Africa being a sort of consumption-based economy, but if the engineering side is doing well, do you tend to focus on sort of niche areas, whether it be IT or HR or engineering? Is that the way that you operate?
It's very much one of the recipes for our success has been a resolute focus on key niches, IT, finance, engineering, and others.